Hello, hello.
Oh, hey, hey, hey.
How we doing, man?
What is going on, brother?
Oh, dude, another day in the life here in Texas. Another day in the life here in Texas, man. Living the dream.
Nice.
How about you?
Oh, same old, same old. We were kind of talking back room. I'm a little bit pissed off at myself. I had a injury in the gym, but figuring figuring that out day over day here. But
You know, when we were
everything's
chatting
good.
when we were chatting in the back room, it made me think of something because we're talking about inflation today and shopping for food and stuff. Remember when I'll say the lockdowns first hit? Remember when they first hit and all the fitness equipment got so expensive because
Oh yeah,
everybody was buying out everything? I
yeah,
got adjustable dumbbells recently, the power blocks, and I got them
yeah,
for like 30% off. I'm like, dude, I remember when you couldn't find these things for less than like $800 here in the
yeah,
United States.
yeah. Any brand that was selling those like the two dumbbells that could go from like 5 to 50 pounds,
Yeah.
man, they were like, yeah, they were crazy.
It
And
was like hotcakes, dude. You couldn't
if it
find
was
them.
a if it was a brand name like Bowflex or Power Blocks, it was yeah crazy. You've got what, like 60 pounds there total, or I guess 120. So like the big ones go up to like maybe 50 or 60. So 100 pounds total, and yeah, $800 was not like uncommon to see.
Mm-hmm.
Like,
Yeah,
man,
because
yeah,
it
I
doesn't even include
remember.
the expansion packs, dude. And now they're like
Yeah,
on sale and stuff. I'm like, oh, that trend died out fast. We're back to normal here.
yeah, like
Oh, it's
prior.
finally time to swoop in 2 years later to buy a set of these damn things.
Yeah, and prior to like that would be March 2020, I guess. Like one of like a pretty fundamental number I looked for, like if I was buying plates or weights or like kind of just like looking at it, it was like somewhere around $1 per pound. Whereas like
Yeah,
that's like what did I just say? Like 800 to $1,000 for 100 pounds. So
$8
like
a
it's
pound.
like 10x.
Yeah, but well, yeah. Speaking of that, obviously that was a supply issue there, not inflation.
Mm-hmm.
But you know, we did talk about this briefly on last episode, and then RG3 popped on temporarily, but
Mm-hmm.
we wanted to do more of a deeper dive into really the macro environment, what's going on, especially for the Hexicans, because right now we're dealing with obviously a very strong bear market, right? With everything, we're in a very difficult macro environment when it comes to assets of all calibers, really outside of like what precious metals and stuff like that, right? So you have stocks, you have even the real estate market is showing big signs of decline. The crypto market has been totally wiped out, right? 85,
Mm-hmm.
90% correction, a lot of altcoins. Bitcoin down about 50% now, it's still trading around 28K. And then inflation has been really the name of the game for the past year. And a lot of the verbiage from the Federal Reserve here, at least the US, has been, you know, trying to keep this transitory inflation, excuse me, under control. And obviously they
Mm-hmm.
haven't, because real inflation rates, if you've been to the grocery store anytime at all over the past 6 months, has been around anywhere from 30 to 200%. I mean, I think I saw eggs again at not even Costco, it was like Walmart, and it was like $8 for 24 eggs, something like that.
Oof.
It's just nuts, dude. So obviously, CPI, we've talked about that too. We'll touch on some of these things again, are
Yeah.
not really true to what's actually happening because they can massage the consumer price index, right? To kind of, you know, not falsify the report, but massage it to look the way they want it to look, to make it seem like 8% inflation is the real deal when really it's much higher. But we wanted to touch on this more. We wanted to bring it back to food
Mm-hmm.
because these can be very annoying, frustrating, and trying times, especially if you're on a very strict budget that is now under the constraints of inflation, which is robbing people's value from their paychecks and making you earn less, right? Your purchasing power is being taken from you. So
Yeah.
we want to talk about some items that are going to be potentially clear good fits during, let's be honest, probably the next 1 to 2 years. I think there's going to be some hyper transitory events, at least in the United States, that are going to happen, whether it be in oil, wheat, in a bunch of different areas. But yeah, so hopefully you can hit this in a way that's valuable for you guys and give you some stuff to look for when you're at the grocery store next.
Yeah, and really just start employing strategies that preserves uh, capital and doesn't just like siphon it away. Um, there's so many different strategies and like specific sectors you can look at, specific items. One of the main things like to be really diligent about is to try to make your in this environment with all these different headwinds and all these different factors like playing into one another. You really need to find a way to make your dollar go a little bit further because it is just falling shorter and shorter and shorter. I'd say like maybe one of the benefits as of late is like it seems to be a pretty well-known effect now. Like a lot of what I'm going to say, like normies, like will reference inflation to me now. And I'll be like, well, so like now it's almost like maybe getting close to a top sign for inflation. It's like, okay, like now that I've got the guy at the wine store telling me that my wine is a little more expensive because of
Well, dude,
inflation.
you know what just happened?
Like what?
Biden just requested a meeting
Uh-huh.
with Jerome Powell, who's
actually, yeah, keep going. I think I might have seen some of it.
Yeah, you could probably pull an article up on that pretty soon, and you know, we're not getting into politics on this channel, or at least on this episode by any means.
Yeah.
We're not here to talk about that. But the point is regardless of whoever's in power, you could, like, you made a good point. Top signal. Everybody's talking about inflation. Everybody and their mother is aware of it. That's bad news bears for whoever is in political power, right?
Mm-hmm.
That is bad. Does not pull well. So when you see Biden requesting the federal chair to come talk with him about, you know, combating inflation and stuff, you know, it's gotten really bad. You know, it's gotten really bad. That's all I really want to say, because you made a good point. Like, yeah, everybody knows. It's like when people know about Bitcoin and people are like trying to buy Bitcoin that you would never expect to buy Bitcoin.
Yeah.
Good top signal. You should probably start taking some profits, you know? So it hits like $10 to $20 and everybody's talking about it. It's like, yeah, you know, probably a good time to shave some off the top.
Yeah.
Yeah, I saw that. I think it was like a week or two ago.
Yeah, I see it was streamed. I just found like a YouTube link here from Yahoo Finance. President Biden meets with Fed Chair Powell to discuss inflation and the economy.
Yeah, I don't imagine how that conversation
that's pretty well
which is nuts, because like Biden has been in power for a long time, and you know, and like people who are smart to understand how the Federal Reserve works understands that this boom bust cycle has been going on for decades in the United States, ever since we got off the gold standard. So this isn't like anything new, right? Just that this bubble has been blown up even bigger than the one in the 08 crash or the .com crash in the 2000s.
Yeah.
So it's like, what can he possibly say? It's like, well, we're going to raise interest rates and crash the economy. We'll fight inflation, but there's a lot of pain coming to do that. Or we're going to fight inflation for a little bit, make it seem like that, strengthen the US dollar, and that gives us the ability to print a lot more money and then off ship that inflation to other countries, because they're going to buy US bonds, the US dollar, and then here we go again, right? The bubble starts to inflate again. That's what we've been talking about. Hey, wait for Jerome Powell to start pivoting. Hey, we did 2 50 basis point hikes, and I think they're about to do another one here. We're thinking about pausing. And he already said that. I don't know if you saw that in his last meeting. He's like, we're thinking about pausing after doing rate hikes. They're like, we're going to do rate hikes this year, and then we're thinking about pausing. Notice he said thinking about pausing, not actually pausing. We're going to think about pausing rate hikes. And if you guys don't know, this is the Federal Reserve interest rate that they provide to like banks, right?
Yeah. Have we had 2 official hikes at this point?
I think we've had 2, or we still, what do we have right now currently? I think we've had either 1 or 2, and we're about to do one very soon here. I think they're about to do their second one, which is a second 50 basis point hike that they said they're doing this month in June.
Because it officially, like the QT officially started June 1, where now like the balance sheet is actually retracting. Like they have actually stopped purchasing treasuries and bonds and shit, and just like,
well, they're selling them. So they're actively they're creating sell pressure into the environment now. So now the Federal Reserve, instead of buying up all these shitty assets, propping up the markets, providing liquidity, they're not selling and putting sell pressure into the markets on top. So they're doing a double whammy, right? They're increasing rates that are going to drive mortgage up, right? So they're basically like, you know, hurting our economy's ability to create money out of thin air. Like, here's a loan, right? That's how money's created. Here's a loan. Here's your money out of thin air. You know what I mean? And then also you have the tightening that you said. They're selling assets off their balance sheet into the open market.
Yeah.
And they've never really done a double whammy. At least they haven't in a long, long time. So everybody's right now kind of just chilling here, waiting, saying, yeah, inflation's really high, but is this going to crash the markets? Because, dude, at least in America, the NASDAQ already corrected, what, 30%? It's up a bit now nominally, but they crashed to a bottom of about 30%. Dow is down a bit. Like, we're very close to bear market territory after one rate hike. And inflation, depending on what you want to look at, the terrible CPI, or you want to look at the shadow stats, which is typically a bit more accurate, we're somewhere around 15 to 20% inflation. So it's like, even if they get it to come down a little bit before things crash, we're still seeing higher costs. So what we're going to get into further in this episode is which things that we expect to go up highest most, where the supply chain crunches are going, and how do we shop accordingly so we can still hit calories effectively, have food that's going to last a long time, and not break the bank right now. Seriously, this is the time, guys, to take care of your health in a bear market when everybody's kind of just annoyed and the charts aren't looking super pretty. We get it. It's not fun. But when everything's beautiful again, the charts are going up and Hex is going to do what it's going to do, you don't want to have your health to worry about during that time. That's the fun time, right? You want to have the weight off of you. You want to be feeling good in a healthier state and prepared. So this is the time, man. This is why a lot of Hexicans are getting on their health grind right now, understanding how to do this, because, you know, dealing with health problems is not something you want to do in a hyperinflationary environment with a healthcare system that is brinking on the verge of collapse here, at least in America. I can't speak to Canada, but I know America is not looking too hot.
Well, yeah, we're usually in lockstep with you guys.
No, perfect. So then you're not far behind us.
No, I do not think so.
It's not a good thing because we're not doing good.
Macro sucks right now, but it's kind of, it's just a whole bunch of chickens coming to roost. It's like what's the other one I'll pull up is freaking Yellen being like, I didn't fully understand inflation or what would happen with inflation. Well, yeah, no shit.
Oh yeah, Yellen, who wasn't she formerly chairman?
She might have been.
Oh, she was.
But now what the heck is she now? The Secretary of the Treasury, right?
Yep.
Yeah, I can't remember who tweeted. Probably someone like Zero Hedge or.
No, I saw it. He was basically like, "Hey, yeah, I was wrong on inflation." It's like, dude, how was every major economist, outside of the Fed and in the Secretary, totally right, and all of you guys were wrong? Like, notice like the verbiage. Like, you understand, like the Fed doesn't operate on what they're actually going to do. They operate on what they say they're going to do. They don't really care about inflation.
Yeah.
Like, that's the first thing every American needs to understand. The Federal Reserve is a private entity. They're not a part of the government, the U.S. government. They have nothing to do with the U.S. government. And they do not care about inflation at all. We talked about this last stream. I don't know if it blew over people's heads, but we talked about how they care about strengthening the U.S. dollar as a reserve currency for geopolitical reasons. That is all they care about. They want to strengthen the U.S. dollar. And it's currently at the strongest it's been in a long time. I don't know if anybody's been paying attention, but a lot of currencies are going to shitsville right now compared to the U.S. dollar. A lot of them are going to shit. Japan having a real rough time right now. The ruble, that's another story. We don't have to talk about that today. But a lot of currencies are losing their purchasing power to the U.S. dollar right now. I'm not saying it's going to last forever, but the point is it's interesting how they operate on what they say they're going to do, but they can't actually do it. Like they said initially they're going to raise rates all the way throughout next year. And it's like, they can't do that. Like we have the charts to show that they can't raise rates past 2.5% without the market totally collapsing.
Yeah.
So I don't know what you want to start with, man. We can start with oil. We could start with real estate numbers. We could start with just overall inflation rates from CPI. We could start with, dude, take your pick, man. We can start with a lot. We start with where the markets are at to show people how much further they have to go before things actually reach a bottom.
Yeah, we got a CPI number coming up this week, I believe. Or I guess when I say that, I mean the US.
When do they usually post that CPI?
It should be Friday, I believe.
It says June 2nd.
Oh, maybe it happened this past Friday. Or that was a Thursday, I guess. It doesn't come out every week, does it?
Okay, maybe not. No, this is April. Wait a minute.
I had it in my head. It's coming out Friday, June 10.
Because they didn't post June yet. Because May came in at 8.3%, down 0.2% from. Wait, that was April. What the hell is May's number?
I've got May. Median forecast 8.2. Oh, they're going to report on May.
Yeah, they're going to report on May in June. That's what it is. Okay, that's all.
So their median forecast is calling for 8.2%. Previous 8.3. So April 8.3, and they're calling for May to be 8.2. By their calculation of CPI.
That's craziness, dude.
Right.
That's
when we briefly touched, so like one of the things So this is a basket of shit, and I think this basket changes, right? Like I feel like
Dude, they change what they want in the CPI all the time, and then
Yeah.
they'll pull out core CPI.
Yeah.
Because they'll think that that's different. And it's like when you go off of the actual standard that was used in the 70s and 80s, Shadow Stats, which is a website that calculates what that would put that number at, had we use that standard, the old one, inflation is well above 15%. Like you just have to look at food or a lot of the standard commodities that we buy and use every day.
Yeah.
To see that it's gone up 100% plus in certain areas. And every day it's going up too, right? It's not just gas. Just gas is the thing that is in front of everybody's face. So you can't really ignore it, right? I could just walk into the grocery store and be like, hey, I'm not buying beef anymore, you know? Yeah. But if I'm driving my car to get to work, it's like, hey, gas at the pump went up another 40 cents in a week. Like what the F's going on here? This is frustrating. It's costing me $100 to fill up my tank now.
Yeah. Yeah. So there's categories in the CPI market basket: housing, transportation, recreation, apparel, education, food, shelter, household operations, furnishings, yada, yada, yada. So yeah, to me that leaves it ambiguous enough where they get to kind of like fuck with it, right, to their benefit. Because obviously, like really briefly, 2 weeks ago, last week we didn't come on, it was Memorial Day. 2 weeks ago, we pulled up some of the protein stuff that absolutely boggled my mind. Protein powder, it was up, like 6x in 2 years or something from what I was paying.
Thankfully, the brand I told you about is still like $25.
Yeah, so I will be
that. Thankfully,
for that. Was that the Walmart brand? Yeah.
No, that was Gold Standard. It just Walmart carries it.
Right.
Yeah.
Yeah. So there are still like deals to be had out there. It's just like on you and on us to really search them out, and then to also like dissect. One of the big things when you're in an actual grocery store, lots of sales used to just like grab my eye. But if you actually go and calculate the price, like per unit weight is a much better way to go about it. Oftentimes the sales are still more expensive than a larger quantity of the same good, like just the next aisle over or the next door over. I think my biggest recommendation when you're in a grocery store, like if we want to start like with food specifically, is literally pull out your calculator. Like how much are you paying like per unit of protein that you're going to get in your diet? It is going to lend to a lot of work, but it's like dude, like right now I'm buying beef before I'm buying protein powder, unless I find this one like specific brand. Like that is
I think it's tougher for you for some reason too. Like
in Canada, yeah, like costs are inflated in the grocery store relative to American stuff, but it's like in general, our stuff is relatively expensive, more expensive everywhere.
Yeah, Americans forget that, man. Like they're like, oh, it's so high here. I'm like, bro, like in Europe, it's like already $8 to $10 a gallon of gas.
Yeah.
Like you guys need to understand that this is coming, and it's very, very soon.
Yeah. Yeah. So like, do a little bit of work in the store. It will preserve your dollar, hopefully long enough until a time where it's not just fucking going to zero. If you are in the position that you can get out of the dollar, like right now, it might not be the best time. Like shit is going down and the dollar's going up right now, but eventually, like that is going to turn around.
Yeah, we'll touch on the DXY here in a bit. Can you pull up the oil chart real quick?
Yeah.
Because we talked about this, guys, last week or a couple weeks ago. Remember, we called this a couple weeks ago, right? It wasn't even out of the ascending triangle yet. This is the daily chart, right? We were down here around 115 or 114, or maybe we were bouncing around 111, 112. Listen, guys, this is WTI crude. This is a chart on oil, and it's forming an ascending triangle, right? You had this break up above on the Russia news, right? The Russian-Ukraine war, and we hit all the way up to 129, then it pulled back big time. But it's been following this trend, and yes, like oil is going to see some insanely high numbers, and yes, typically oil is a very strong recession indicator. It typically is accurate. I think like good 80% of the time. And we already know, people who are smart enough to see what's going on already know that we're in a recession, right? So when we look at a recession, in America at least, we look at 2 quarters of GDP. And if they're both negative, then it's a trailing indicator. It says, hey, we've been in a recession. Great. So who does that really help? So we want to look to other things that are going on that are conveying to us that we are obviously in a recession now. We already have 1 quarter of regression on GDP. And then you have things like hyperinflation. You have things like the job market, which is strangely still strong, which is a whole other conversation. But oil is probably one of the more obvious ones, as well as just regular inflation. But you see this ascending triangle, right? And we're about to break out. So if we take the base of this, and it's about 24 points. And I think we talked about this last week. They said like 145, right? Something like that. Because 24 points is about, okay, 140. So right around 140. I still think oil is going to hit right around 140 per barrel, guys. And, gas prices haven't even caught up to where we're at yet. Like we just ripped from 111 to 120 a barrel. We just ripped up $10 a barrel. Like we haven't even caught that. So I really, truly think $8 to $10 per gallon of gas, right? Maybe like New York, California situation, $8 to $10 around there. I mean, they're already seeing numbers close to that, to be honest and frank. So I'm probably wrong there. So we'll probably see in Texas something like 6 to 7, and then New York, California being the outlier states are going to be a little bit higher, right? Like get that kind of stuff. But this is coming. Like this is going to indicate what's happening. So what we need to understand here with oil costs going up the way they are, look at historically what has happened, right? So if we go to the monthly chart, we can zoom out here. Look at all the times that historically oil has gone up and then what has happened after, right? Look at this last time we peaked here. This was 2008 of May. Guess what happened then?
Mm-hmm.
The financial crisis, right? And then you have, let's go back here to 2000. Here we go again. I know it doesn't look as big, but this is still big. This is still a 230% run up in oil prices. Yeah. This doesn't look big. That's a 230% run up. And that was the 2000 dot-com bubble crashing, right? So you have that here. And then you had this big dip down here with a negative. So we're right back here again, right back here again. We're finding support now. I want you guys to understand this. This was resistance for a long time, for almost 2 months. We have now found support on previous resistance on oil on the monthly chart. This is bullish for oil, which is not bullish for the economy as a whole. We can't get enough oil to people. The reserves are not there. So many of them are shut down. The refineries were shut down after coronavirus. There's too much demand, even with people staying home. There's nothing that's going to prevent this from happening. They're already talking about trying to come out with price controls here in America too, dude, for rent and stuff. And it's like, you can't do this on a free market. This is going to do what it's going to do. Yeah. And the only way to really cure this, guess what the solution is to cure this, guys, is high prices. See what happened up here? Prices got too high and Americans said, F this, I'm not paying it. And then it came down. Same thing up here, same thing up here. Eventually it's going to get so high that people aren't going to pay it, and then demand will fall, right? Yeah. So that is the cure to inflation, and you can't really do anything about it. And the Federal Reserve is running out of tools too. And the other chart I wanted to show you guys was is the Dixie, the DXY.
Dollar.
Yep, the dollar. This is the one you really want to pay attention to, man. Let's go to the weekly. So we talked about this. Last time we talked about this was what? It was pretty high. So notice it's pulled back a little bit, but it's finding support. Once again, it's finding support at a historically resistance level. See this level? Every single time it has hit that and come back down, and now it's finding support. Because remember what the reserve is doing, and actually real quick to clarify for anybody who doesn't know what the Dixie is, the DXY is a comparison of the US dollar's strength to every other currency. That's all it is. It's not a comparison of how well the dollar is buying you food or how well the dollar is buying you oil, because we know that that's shitty. It's getting worse. Yeah. Right? This is just which turd is the worst turd in the punch bowl. That's really what it is right now. We know fiat currencies are not great, but the point is this is gaining steam. This is on its parabolic rise. It is not fallen out of the parabola yet. And with the Federal Reserve still at the moment not pivoting and increasing rates and tightening its balance sheet, this will continue to go further and further up as people pull money out of asset classes like crypto, stocks, real estate, etc., and they go into the safe haven, which is still the safe haven for now, which is utterly fascinating to me that it's still the safe haven. Dollar. So when we see something like this, we understand that this dollar is going to buy us more of stuff like what? Hacks, right? This is historically good times to buy. Look at what it did up here with coronavirus. What was the best time to buy right here? Coronavirus. Hex. Because it performed better than Bitcoin, right? This is the best time to get Hex for its cheapest, right here. Because then after that, the dollar fell what? From here all the way down to here?
Yeah,
Well,
dollar goes
13%.
down.
So now I want to show you this. This is why it's important to know why the Reserve, the Federal Reserve, is doing what it's doing. It wants to restore strength to the dollar as a reserve currency. It doesn't really give a shit about inflation. Inflation is always going to be here to some extent, whether it's at 2% or 20. Clearly, they don't care about that either.
Mm-hmm.
But look at how strong the dollar is. The last time it was this strong was like the last time it was stronger than this point was all the way back here in September of 2002, December of 2002.
Yeah.
Like if I extend this out, the dollar has not been this strong or stronger than this since back here. Like we're encroaching now on levels that we're not seeing since 2002 as it pertains to other currencies.
Yeah.
Remember, not food or anything like that. We're feeling the pressure there. So this is really important to know because eventually this is going to hit a top. There's a couple levels that it could where we think the markets are going to break, but we're already seeing the markets breaking. So this is important to watch. The DXY is such an important metric to watch and be aware of and know what's going to happen next when it comes to the markets, not as it pertains to buying food, but the markets themselves. Because what they do with policy is really going to dictate what people feel comfortable doing with their money. And right now, people are taking their money out of assets and putting in the dollar, or they're getting liquidated and they have to go get more dollars to pay off their freaking margin calls, especially in crypto. I mean, how many freaking billions of dollars were just wiped off the crypto market?
Yeah.
What do you think these people are doing? Scrambling to find dollars, selling all their shit.
Yeah.
To go back into dollars. So this thing has been on a rip. Look at this thing. Rip, 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 all the way up. Look at this. Nonstop. And we're going up almost in a straight line now. So this is important to understand contextually what's going on here. The last thing I want to show you is let's look at the NASDAQ here. So we're at key levels here in the NASDAQ, right? We saw this level here. Should I do the daily? I'll keep it to the weekly. So we saw key levels here. The NASDAQ has is a pretty big market cap, right? But we're down right around what, 25% after a bear rally. This is definitely a dead cat bounce here, right? We're looking at a dead cat bounce here on this shit. So the point is there is a lot of downside here to go. If this level here falls, I don't have volume profile to see what we're really looking at in terms of how many buyers bought here, but I'm pretty sure a majority of people bought here and over here. There is a lot of room left to fall here, right? We still have another from here, probably another right around until there, another 22% to come, which is basically close to a 50% correction, which once again, historically, we need to understand these things. This is done, I think, twice. It's fallen 50%. I think right here. Nope, that's 25%. Where has it fallen 50%? I need to go to the monthly to do this. So .com it did. Fell more than 50%.
You know, .com, it would have got obliterated. Yeah, how about right
08, it fell. Okay, yep, 2008. So .com bubble, it fell over 50%. And then in 08, it fell 55%.
Yeah.
Okay? And then we had the COVID crash, which is right over here, which went to about 30%. It's like nothing compared to what we thought it was at the time.
Yeah.
So this puppy has a lot of room to fall, boys. A lot of room to fall. Right?
Yeah, man.
Be prepared for this. Because depending on what the Fed actually does and how strong they want the US dollar. Remember, it's not about inflation. How strong do they want the US dollar and how much can the markets handle?
Yeah.
We have a lot of room to go here. So
there's some big, like, I don't know that I would call like the current environment equal to like a .com or an 08 like GFC, or I don't even know that I would call it like, well, it's the fallout of the start of Corona, right, of 2020. But there are some serious like market forces coming to a head, coming to a T here.
Dude, I think this is worse.
Those really?
I think this is way worse than the .com bubble, and because what we essentially did is remember the system itself, the financial system is so leveraged now with so much debt.
Mm-hmm.
What you have to look at is the Fed funds rate. Hold on, I'm going to look up something real quick. Fed funds rate history. You need to look at the Fed funds rate history, the effective rate of the Federal Reserve, right? So I'm going to go to here. I'm going to show you guys this. This is going to be important. Yeah, we're going to go here. So this is economic data. of what the Federal Reserve has done with interest rates. So this is what they've done with interest rates for percentage points before they've reversed course and then lowered interest rates, right? So lowering interest rates are typically an easier monetary policy, right?
Mhm.
Where it's easier, you get money that's cheaper. So
Yeah.
it's cheaper to run a business, cheaper to get a loan, cheaper to whatever. So look at when the last time we raised rates, which I think was when Paul Volcker was a part of the Federal Reserve, he brought rates all the way up to 19%. Look at that. 19%. Can I maximize this? Lit. 19%. 19% of an interest rate. Think about now people are complaining about a mortgage rate at 5%.
Yeah.
Think about what would happen to the US the world financial system if rates went anywhere near this. It wouldn't work. So there's so much more debt layered on the system, right? So look at here. So what I want you guys to notice is if we were to make a trend line here, see how these little bumps get lower and lower?
Yeah, before you even do that, what was this? Do you know what this response or what was happening right before we ran up to 19%?
This was in the 80s when we had our first really big inflationary crisis going on.
Yeah, man. Like now.
Yeah. Oh, it's worse
Right?
than now. I think the inflation's even worse now because
Hmm.
the US dollar value up until recently, right? Because it's strengthened a lot recently, you've lost so much purchasing power because of inflation over these many years. And obviously wages have not caught up with it.
Yeah.
You know, when inflation's 8% month over month or year over year,
Yeah.
or a lot more than that, let's be honest.
Allegedly, not
Yeah, allegedly.
year over year.
If you're not getting a 30% raise for the year and then some, like you're screwed. You're losing money.
Yeah.
That's why people are job hopping everywhere. Yeah, I mean that's why the job market, part of the reason why it's so hot, because you have to in order to keep up with wage growth you need. So every bump you see here is where the Federal Reserve, I want everybody to think of these humps as a clip in a gun, right? And the Federal Reserve has this gun as ammo, and the interest rates are ammo. And every time they raise rates, because there's more debt in the system, they can't raise rates as high. So they have less ammo in the tank, right? Less ammo in the gun. So right, notice here in the 2000, we were at 6.5%, right? And then shit got crazy and then they drop it all the way down, almost to 0%. They went all the way down to 1%. So then notice up here, guess what? Does that look familiar? Oh, wait, we were at 5.25%. And then they dropped it all the way down, all the way down, all the way down until things crashed out here.
Yeah.
All the way down to 1/4 basis point. And then they were held. And then I think right around when Trump got in office, they started raising rates. And this is when Yellen was there. I can't remember. I think it's when Yellen was there. So around 2015, 2016, they start raising by little baby basis point heights. Like we're not even at 1% yet. Okay, there we hit 1%.
Yeah.
And on this one, people don't realize this. The reverse repo market broke in 2019, and the banking system basically broke overnight, and they had to basically fix everything. We went from 2.5%. They couldn't even get past 2.5%. Look at this, bro.
Mm-hmm.
And all the way back down to 0.08. That was the federal funds rate to banks, 0.08, bro. And it has stayed flat the whole time. And see this little blip down here, guys? This little baby blip. We're at 0.75 basis points. So we're not even at 1% yet. We're at 0.75%.
Yeah.
And the NASDAQ is already down 25%. You honestly are telling me that you think they're going to raise rates to combat inflation all the way through? They can't. They can't do it. Look, they're going to get as high as maybe 2%, not even. Yeah. So we're talking, in my opinion,
Sorry, or can we break this trend, like these lower highs? So
no,
right now, what the Fed is doing is responding to rising inflation, quote unquote, responding to inflation in the way that they do so by raising rates. Mm-hmm. Okay, makes sense. Back in the 70s, they saw a huge inflation, and they were able to taper all the way up to 19% in terms of interest rates. But now, like you mentioned, they've kind of had less ammo or less in the tank. We can't actually get that high because it is an absolute fucking ball, like shit hits the fan if we continue past that point. So what we see is they try to fight it, but they eventually have to ease off. Is there a scenario where we break through like this downward trend line in the peak of an interest rate? Like, can it go up past 2.5 again? And if it does, like what the fuck does it hit?
Notice what the big trend change here was. We got off the gold standard.
Yeah. So the fuck? What's that website? What the fuck happened in 1971?
So now that we're on a inflationary fiat currency that's losing purchasing power year over year, month over month.
Yeah.
this system isn't designed to work forever, right? That's why people are saying that there is a economic cycle coming and a super cycle coming as well, right? You have emerging technologies. You have the economic cycle coming in as well after '08, every about 10 to 12 years. So we're due for all of this all at the same time. That's why it's such a big deal to prepare now and focus on health and get your cost analysis in order, get your quality of life in order, but also reduce your cost of living. All these things need to be happening immediately, because not only for the sake of crypto, right, and buying the bottom and being smart, but because just the uncertainty of what's to come and making sure you pull money out of the system. And what I mean by system, out of the banking system, right? So why do you think we talk about crypto and our keys and keeping them on cold storage, away from exchanges, all this stuff that Richard Hart talks about all the time? It's not to just, keep the narrative going. It's because for real, when a, potential, bank holiday happens and a bank balance happens, everybody knows what that is. We won't get in the bank balance today, but if the bank shut down and do a balance and, hey, we're turning them off for a week and we're coming back out with a digital currency, and here's all of your dollars are still in the bank, but now we have a lot more control over it, and you also just lost another 30% of your purchasing power for a currency reset, you may be screwed if you don't have money outside of that in Hex or Bitcoin or whatever it is that you're doing, or gold or whatever your flavor of the month is. So what this is so important to tell people is that this is what's actually going to happen versus what they say is going to happen. They can't raise rates above 2% because everything breaks. You're talking a total wipeout of the stock market. The stock market is the US economy. Without it, nothing works. Pensions, 401ks, retirement, futures, gone. They can't have that happen. So they need to create enough pain and get enough strength of the dollar. Because remember, we were on the DXY chart earlier. When you have a strong dollar, what does that mean? They have ammo there now, right? Notice they don't have a lot of ammo here, but because of everything else going on in the world, they're able to get the strength of the dollar up high enough so they don't have to raise rates that high. Because every other country is printing their currency into oblivion.
Yeah.
And continuing with easy monetary policy, the US is really the only country right now tightening. So they're viewing it as an opportunity to strengthen the dollar, because guess what? Now that the DXY is at all-time highs, guess what they can do in the next 3 to 6 months? Because I'm telling you, we're going to talk about this at 3 to 6 months. And we're going to be like, hey, guess what happened? They're pivoting. They didn't actually stop tightening, but they're talking about it. And now they're telling you that they're probably going to stop this month. That's the buy signal. That's the signal of, guess what? They're going to start freaking printing again. They're going to start pushing out money, increasing M2, money supply. They're going to do all the things again because now the DXY has room to fall.
Yeah.
What happens after that, in my opinion, is where the currency reset happens. I think we're probably 2 to 3 years away from, digital bank currency, a Fed coin, things of this nature. But things have to get a bit more worse before people are willing in America at least to say, hey, please, yes, just help me out. I'll do anything. I'll get on the digital currency. I don't care. You can control my spending. I just need help. That day is not quite yet here, but that's what this is all leading towards, in my humble opinion. This is opinion, obviously. But so, yeah, this is important. The Fed funds rate dictates a lot of what they have, because this is all they have. Think about it. They have interest rates and they have their balance sheet. It's like a hammer and like a saw, and that's all they have. Like just these two crazy tools.
Yeah.
So what does this tell us? Well, they may hurt inflation. They may bring inflation down. I do think that inflation will be coming down if they do continue to raise rates over the next couple of months. But that's going to be short-lived. We're talking, honestly, I think they're going to stop raising rates probably in 2 to 3 months max. So I'm going to call it right now. We're in June. We're about to be going in June, July. I think by August, calling it right now, we'll watch the stream again. I think by August, they will stop raising rates because of all the pain and the strength of the US dollars where they need it. But they want to wipe out some of the market. They understand that there's a bubble. They're trying to cause a safe landing and do it without crashing everything, of course. But yeah, like it's bad monetary policy that creates these situations where a bust is needed to bring all the asset prices back down to where they really deserve to be. You have people bidding up housing prices in America and in Canada, because I saw Canada stories too, up by $100,000, $200,000, $300,000 above asking with with no inspections.
Oh, no inspection, man!
This is not
crazy.
This is not good.
No, this
is terrible.
Yeah.
So there's going to be a top. Like people think, oh, it's just going to go on forever. They said that in '08. They said that in 2000.
Yep.
But us Hexicans know what needs to be done. We know that this is the bottom signal. we know that HEX is going to go crazy again. We know it's the best buying opportunity ever. 85 to 95% correction is the bottom, period. Richard is in this for glory. You think he's going to let the most appreciating asset on the planet die? No. No, he's not. And you want to prepare with your health because money means literally jack shit if you're not healthy. So I want to stop talking about this because I know I talked about it a lot. But if people have questions and stuff, pop in because this is about to get real interesting in America. And I will say, based on the people I follow, I do think that there's going to be some major crises happening in Europe as it pertains to energy and a lot of other geopolitical issues over there. I think if there is going to be a crash, that Europe would happen first because the U.S. is so interconnected that we'll be a few weeks off from that. But now is the time to prepare. Cliff notes, buy food in bulk, make sure the calories and macros match up to your goals.
Yeah.
And make sure it has a expiration date that's a year or so out. And be safe, man. Buy 3 to 6 months at least to start worth of food. The prices are only going up, guys.
Yeah.
Go out and get some oatmeal. Okay, let me go through my top list of things. Ready?
Sure.
Oatmeal, protein bars, cereal, almond milk, frozen chicken, depending on where I get it from at Walmart.
Yeah.
What else am I forgetting here? Obviously, protein powder. You know, I'm a big fan of the protein supplements, not because of like lifting, guys. It's because it's going to last a long time. Don't go out and like freeze a bunch of beef. What happens if you lose power? you know, like be smart. Get stuff that you're going to use regardless. Like if things are just fine, cool. You just stocked up on 6 months worth of food and you just saved yourself another 10% of inflation month over month on it. It's going up. Like it's going to keep going up. All right. Maybe for the next few months it won't go up, but it's going to go up after that because they're not going to keep increasing rates from here.
Yeah, I think if you have a freezer with like pretty high reliability, then it could be a good idea to like freeze some shit. Maybe even a freaking Jenny. I don't know.
What's a Jenny?
A generator.
Oh gosh, I've never heard
like,
of it as a Jenny.
I think people that play
what's
that game called? Dead by Daylight, call them Jennies.
Generators.
Yeah, so if you have a generator and you have like a sizable deep freeze, then yeah, go to town. Like go in with a friend on like some sort of animal. It makes the price per pound, price per kilo, whatever you look at it, like really, really feasible. Yeah, protein is extremely important. Don't just go for things that you can't really preserve, like the things that we always talk about seem to the things that fly off the shelf before anything else, like milk. Like good luck keeping that.
Yeah, almond milk lasts a long time at least.
Almond milk lasts a long ass time.
Yeah.
What like fresh water, like shit like that. Yeah, what else? You said oatmeal. I like oatmeal. Rice usually.
Oh, rice is another good one. It's just tougher to like cook and prepare it versus like oatmeal. Like throw water in there because like carbs and protein, a little bit of fiber, not much fat. That's probably the only downside if you're like, hey, how do we still stay well rounded? Oh, another thing, peanut butter and jelly. You don't always need bread to eat it, guys. Peanut butter is probably the best thing ever. Now, as it pertains to losing weight in a strong economic environment, peanut butter is probably the worst thing because it's super high in calorie and it's not super filling. This is something I have when I'm on 3,100 calories a day and I have calories to blow. I love PB&J sandwiches, but I want to have at least a few of those jars saved up ready to go because of all the protein, fat, and a little bit of carbs. It's really just a great combination of all the macronutrients that you can have available if shit were to hit the fan or you're just trying to save on costs because it's really cost effective. I mean, dude, I went to Walmart the other day. They had a whole pack of like 8 or 10, I can't remember what the number was, of bagels, like the cinnamon raisin bagels for $1.40, dude.
Damn.
The deals are out there, man. The deals are out there. Just be
look for them.
Yeah, be clever, man. Now is the time to save money, live below your means, get your health in order, create value, make fiat currencies, which we don't like currently, but we have to use them, and obviously buy hacks and stake it and do your thing, right? And get out of the financial system because eventually – this whole thing's coming to a close. And we want to be as prepared as we can.
Yeah.
So yeah, I like bagels too, to be honest. I mean, I know they go bad quick. You can't freeze these things and stuff, but that's more of a way to like save on cost.
You can use the freezer again there, and again, dense, and then honestly a decent amount of protein in a bagel. But not something. If you're somebody trying to lose weight, again, it's a denser
Right. We
It's a
just like
denser item.
make the whole
Right.
Hex army super overweight because they're all just like stocking up on.
It's like, yo, yeah, stock up on peanut butter and bagels, bro. Like,
Yeah.
yeah, great items in a fucking environment where it's like, I am going broke going to the grocery store.
Dude, you know what? I don't really know what the limit's going to be here on things, but it is really interesting seeing where people's breakpoints are. And I want to make this clear, guys. Like, this is a time to remain calm and get all this stuff in order, because when people are eating and have food available and they're prepared, you're of a clear mind. You're not worried about the future. You're able to act accordingly in the now, in the present, and you're able to make sound decisions as it pertains to your health, financial investments, or otherwise. So that's why, like, it is kind of funny to joke about the price is kind of going super high sometimes because it's just kind of a shit show. But at the same token, like, you need to be at peace with things. It's just like what Hex does, right? You're staked for a long period of time. You're at peace. You don't really give a crap. You're in it for the long haul. You're prepared.
Yeah.
Right. You have a sound strategy. So you're not worried versus people who are day trading and freaking the hell out and selling the bottoms like a bunch of idiots, So the point is you want to do the same thing here. You want to be staked out with your health in a way that makes sense and prepared, and also prepare with food choices too. So yeah.
Have a plan.
Right?
Yeah, we do have a plan, have a strategy. And yeah, like you said, if you're able to reduce those outgoing costs, it's going to create a much better framework from which to make decisions from. We do have Walmart, Costco. So we try to go Costco as often as possible. Yeah. We don't have a deep freeze, so like it's nice to, if I am buying beef, it's nice to buy beef from Costco. But I mean I've been buying beef before. I've been buying some other shit right now, which is blowing my mind. It's like every summer when I used to just come home for the summers from the States, before shit was starting to really hit the fan. Like I look at chicken down the States, like I would never pay more than like $1 a pound. And immediately, as soon as I landed on Canadian soil, it was like $14.99 a pound minimum. It's like, what?
I don't even do meat anymore right now, man. It's like not even worth it to me right now at the moment. I'm just like, dude, like I'm fine without it. I don't want to spend all this money. Like even like Uber Eats, dude. Like I had a client, I think I said this like probably like 6 or 8 weeks ago, and it was a client that fed their family with McDonald's, right? And it was like $50 to $70. It was right around there for their family to eat McDonald's for the night. Dude.
Yeah.
Eventually it's gonna be too much. Like we are so close to that point, and people are still kind of unaware of what's going on. It's crazy.
Yeah.
They're unaware of what's going on. Like that's how you know, because gas is the only thing. When you know that gas is the only thing people are paying attention to, how have you been missing everything else? Like this is how these cycles can continue to happen over and over again, because people aren't making the right decisions. So they're going to go in and buy the top, right? Like look at real estate. The fact that people came in and FOMO'd the top and gave 200 grand over asking on these houses, that's how you know that these cycles are going to repeat themselves, because people don't learn. There's a lot of psychology to the way the markets are going to act. And it's this is quite the time to be living in. Let's put it that way, man. This is quite the time to be living in. But maybe we talk about your story quick, about your wait at the urgent care center, because this all comes back to health, guys. Remember, everybody talks about the financial markets, but people forget that there's another market that's crumbling in the background. And I'm not trying to be doom and gloom, but once again, we want to be prepared and not afraid of what's to happen. So I know Exercise, you had a rough go last night and you went to the ER, or was it 2 nights ago?
It was Friday. I went Friday afternoon. I got out of there Friday evening. I had a back injury in the gym. One that I've had before. Just like the fallout was a little more serious than I'm used to seeing. I've tweaked it 3 times in the past, and usually I'm able to kind of like work through it on my own. But could not fucking walk for like a full day. And then day 2, again, could not stand up, could not walk. So it's like, okay, maybe time to hopefully go get this looked at. And I waited in line for 4.5 hours or so before I got into another waiting area, where then it was like pretty quick. Then it was like maybe 20 minutes in there.
It was still 20 minutes once you got into the next room?
Yeah, once I got to the next waiting room. Yeah.
Oh my God.
Yeah, so like it makes sense. So in like Canada's universal, so like some different factors here, but like I was at urgent care as opposed to ER, but I was still getting jumped by like more emergent situations. So like
Sure.
like fair enough, but like I'm out there pacing around for 4.5 hours in like what I would say it was a fairly small center, but man, like it was kind of busy, but it wasn't crazy.
Well,
And
dude, what you gotta understand is the staffing shortages that are going on is a big cause. Like the demand didn't really okay, yes, like I'm not gonna say the word, but like what caused the lockdowns to happen has been
mhm,
causing obviously a negative externality and more pressure on the healthcare environment, right? Because more and more people, especially in America, right, especially with pre-existing conditions, are going with serious situations and are putting a strain on the healthcare system. But there's been a straight up outage of nurses in the
mhm,
healthcare system in America. And I recently had a client who got in a car accident and she had a concussion to her head and she had to wait 8 hours at urgent care. That's in
jeez.
America. And, the point is, and obviously I don't have like a lot of clients, but a lot of them are people who work in urgent care, people who are nurses, people who are administrators. And what they're telling me is that like, yeah, like obesity is getting so bad. Everybody coming in here has pre-existing conditions because of that. No one's talking about it. And because of that, on top of the staffing issues, wait times are crazy.
Yeah.
That's what they're telling you. If you go to the ER, like don't come here with anything unless you're actually dying because you're going to wait potentially even a day. And it's
Yeah.
like, here's the deal. I wish I had the chart to show this, but the CDC doesn't care to update any of their information. So unfortunately, we have to operate on 2020 data still because they just apparently don't want to do their job because they're too busy tracking other things. But the point is I foresee a day where you're going to go to ER or you're going to go to urgent care and it's going to be a 1 to 2 day wait, or it's going to be even a 1 to 2 week wait at the hospital. I truly do.
Yeah.
With what's happening, we are having a lessening amount of healthcare professionals. And of those people who are healthcare professionals, they are also suffering to obesity.
Yeah. Yeah.
They're the majority of my client base. I know that
Yeah.
sounds a little ironic, but they're literally have the craziest job on the planet, and they're typically not taking care of themselves because they're taking care of other people. I'm not saying that's right. They need the right order of operations, but they're saving people's lives, and unfortunately, their health is getting put in the back burner. But the point is healthy people need to care about this. Is my point. What do I do if I get in a car accident and it's a 2 week wait? I am screwed.
Yeah, man.
What do we do if we get sick and something happens and it's like, oh, I'll be fine. It's not me because I'm not going to have type 2 diabetes. I'm not going to have high blood pressure. I'm not going to have, these crazy things that are going to happen with obesity. That's fine and all. What if your parents need to go there and there's a huge wait? What if you need to go there because something out of the blue happens? This is going to be the main conversational topic in the next 5 to 10 years. The markets, nobody's going to care about the markets because it won't matter.
Yeah.
People are going to wake up real quick. They're going to like pull off the like crypto charts and be like, oh, we're actually like, we may not live if we go to the hospital because they just can't. There's not enough people to help us. So I really wish the CDC would put out more information on that, man. I really wish they would, but I feel like they're purposely dropping the ball. Like they don't want to publicize what's going on there because it's just not a good look. It's not a good look right now.
It's like, we have created a bad situation. It's almost an inverse of like the supply and demand relationship that's going on with like the oil that you were talking about. Like this demand is going to pump, and in terms of like patience, and our ability to like handle that demand, well, it fucking sucks right now. So unless like something changes, and like in Canada's landscape, it's like demand is even more prevalent because there's no fucking barrier, right? Not like, and that like, so there's goods and bads that come with that, but it's like that is the relationship that it creates. It creates like exponential higher demand for sometimes real issues, but often it's a complex thing. But yeah, just an interesting like inverse scenario here where the demand for the healthcare system is going to continue to pump and pump and pump, and our supply of like actual staff and healthcare professionals to try to accommodate like that pump is like it is currently failing, and it is not moving in lockstep with the demand right now. Like it's.
Yep. There's one more site I want to show you guys. Give me a sec here.
Yeah, I know less of like the data stuff when it comes to like job numbers in healthcare in Canada, but I know it just took more time than it probably should have in a relatively busy to, I would say, normal like urgent care center. So that's an N of 1, but I think our our sectors are very, very similar.
Yeah. Let's see that.
What was the thing I
Okay.
wanted? Oh yeah, no, you let's go you
My
first,
last one.
and then we'll try to wrap up in the
Yeah.
next 8 minutes or so.
So this is the wait, why is this not expanding? Does this one expand? Okay, I guess it doesn't expand. Huh? Does it expand here?
If you.
Oh, I know why, because it opens in a new tab. Okay, that's fine. So
try holding Control and then just scrolling in. It might fuck with you a bit, but it's not bad.
So this is charting the trend in obesity among adults and youth in the United States. So this is only up to 2017, 2018, guys.
Yeah.
What I want you to understand is, I don't know why
that's gonna fucking spike.
We're still not seeing charts of where it's at in 2019, which they had numbers for 2019, 2020, when we know they're higher than this. We know it's in the 46, 47% range when it got close to 2020. Mm-hmm. And I know that it has gone up exponentially higher since 2020. So we see this chart, you see it's trending up, right? Same thing with severe obesity. So like you said, there's increasing demand on the healthcare side of things, right? You have more people with reliance on medication, more people who are going for emergency care, more people who have underlying health conditions. So the percent chance of the trend or the pressure on the healthcare system is much higher, right? Because someone has a 80% chance of having a heart attack versus 10%, more people are going to have those heart attacks, right? Simple enough. So we scroll down here. This is the one that's really worrisome. The youth.
Mm-hmm. Yeah.
In my opinion, what has changed even more dramatically than people's lives as adults are the lives of the youth, with lockdowns, with social changes, with technology, with activity levels. Activity levels, the big one. And of course, eating preferences and habits from their adult, their parents, their adults. So this is the trend for children obesity. Look at these lines trending up in a parabolic way. This is from 2017, 2018. Yeah, pretty positive that youth is also going to hit 50% obesity rate here pretty soon.
Those are also spiking. Yeah.
This is what, like, this is unfortunately the best that we have right now for charting. I wish we had a candle chart to show this, and not to it's not to poke fun at it or anything like that. It's really just to show people what is actually happening, because people need to understand what's actually happening so we can have an honest conversation about it. But people want to ignore this. And then when these things come to fruition, and like you said, the chickens come home to roost, there's going to be a lot of finger pointing and a lot of knee-jerk reaction policy changes, and it's going to be shitty. It's going to be shitty. So this is the trends that we're seeing right now. Just like add into your comment on, because there's a good one on the, the demand side going up on the healthcare system.
Yeah, man.
Nobody wants to talk about it. It's like, when do we talk about it? When it actually breaks? That's not the time to talk about it, because then people are dying because you can't service them. We just saw it with the lockdowns.
Yeah.
The hospitals are overrun.
Yeah.
With something that had a 99.8% survival rate. So.
Yeah.
It's like, I always bring it back to the kids, because I know people like to get emotional about, like if they're an adult, and it's like, oh, well, this is like a very personal thing. It's like, guys, you can't say anything about the kids. The kids don't deserve this. They need help. We need to help them. They are children. Like, come on. Yeah. So from a PR standpoint, I feel like it's easier to talk about the kids. But so yeah, that's where things are headed. That's why it's so important to care about this stuff now. And if you haven't, look at all the episodes, especially the ones from Exercise that we've done in the past about understanding how to lose weight properly, or just improve your body composition in a way that's very effective, using charts, using analysis, using tools like calorie tracking, etc. A lot of great episodes.
Mm-hmm. And just, first principles thinking. I see a couple comments here. I don't know if we have time to go through them all, but Schwa and Patrice, thanks for being so active in here and commenting and hanging out with us.
Yeah.
I think he was giving you a pretty nice compliment over here when we were going through. I was learning a lot when we were talking about those Fed rates. It's really interesting to look at that and like how obvious it is, like especially looking back in the rearview mirror and then using like those type of analytics to like help you make some decisions and understand what type of decisions there might be yet to come from the Fed.
We'll check back in on those in like a few months. I'll shoot you a message like, hey, guess what tonight's episode?
Yeah, absolutely. What else do we have here? Don't forget healthy fats along with the protein. I can't remember exactly what we were talking about at that point. Yeah, it looks like these guys are having a good conversation in here. Schwa and Patrice, everyone else, yeah. Thanks for being here. The one thing I wanted to pull up before we go was when you were talking about oil and what you were calling for. I swear to God, I did not show Ryan to this in the back room or in the green room, whatever people call it. I think Ryan just called for 140. And this is what these fuckers are calling for. I swear I did not say a fucking word to him. So this is some Goldman Sachs price calls for oil from that they just put out recently. So back in December 2021.
They put it out an hour ago?
Oh yeah, this is recent, man. This is like today.
They put it out an hour before, and I just came on here live and just said I think it's gonna hit 140 for sure.
Yeah, man.
Dude.
So Goldman Sachs first, about 6 months ago, they're like, in a year, we think maybe 100 per barrel. Today, they updated that, and they upped it by 40%. Lol.
How much you want to bet they were like, ascending triangle. I wonder what's gonna happen here.
I don't think we can fucking predict that far. Man, it's so it's just like all these professionals or like fucking talking heads are out here like giving the advice, right? Like here's the other one I wanted to play was Yellen.
I can't hear it. I don't know how we get
audio. Am I not getting audio?
Yeah, I don't hear it.
Anyway, she's saying, I think I was wrong then about inflation being transitory, yada, yada, yada. And she's kind of using it as like it seems to me she's using it to try to gain some clout that she's like owning her mistake. But it's like, yeah, no shit you did. Like, no shit you didn't know. Like, yeah, you could have looked at, it seems to me there's just like so many more like well-informed takes on like what fucking printing and QE and lowering rates like will lead to. And it like, I guess we all kind of know it, like they don't really care, right? There's a larger goal kind of like behind the curtain. They'll cut the point somewhere and like make decisions and make changes to try to address quote unquote inflation. But you know, there's like a larger global economic game at play. So
100%,
it's just like yeah, it's just tiring to like watch, I don't know, like people like this be in charge of like your dollar. It's like, fuck, like it turns out I was wrong about this. Everyone that like me and my friends follow could have told you were wrong about this. And like, not saying that my prediction back then would have been correct to the dot, but it would have been better than the fucking feds and like people just saying, like pointing fingers at, oh, Putin is the reason for your gas being high today, or this is the reason for your gas being high today. It's like, no. I know a much more direct impact.
Yeah, dude, let's be clear.
You guys fucking printed.
There's no righteousness. There's no righteousness with any of this. And honestly, they are so well correlated to the healthcare industry or the health and wellness industry. There's no righteousness in Federal Reserve policy. They don't care about inflation. They care about, like you said, the geopolitical status, the world reserve currency status, strengthening the dollar. Yeah. They don't care how many people they rob purchasing power from.
Nope.
There's no righteousness there. Just like there's no righteousness in the healthcare industry. They don't actually care about people being healthy. If they did, they would actually run politics off of actually fixing real problems in America, like a 70% obesity rate, like everybody dying to the actual causes that are causing 30K deaths a month, right? Yeah. High blood pressure, diabetes, heart disease. Yeah. If they actually cared about these things, you would actually hear about it. You would actually see change. You'd actually see progression, right? Some sort of conversation being had. Never the case. That's why the health and wellness industry is just as despicable.
Yeah.
It's the same shit on a hamster wheel going over and over, and the problem keeps getting worse until it's leveraged so much that now you have obesity, which is the equivalent of a shitty fiat currency, right? Both systems designed to create value and extract value. Well, guess what? They can't keep going on forever. Eventually, there's no more value to extract out of a shitty fiat currency system, and there's no more value to extract out of a human being when everybody's so unhealthy that they're all dying.
Yep.
Think about it. I just correlated that myself right now. They're literally the same thing.
Yeah.
It's literally the same thing. And it's been leveraging on itself because the health and wellness industry and the technology industry are the two biggest industries out right now.
Yeah.
Emerging technology, outside of like assets, right? We're not talking about crypto, but emerging
very,
technology.
Very similar
and healthcare. Those are the two biggest industries are about to go in.
Yeah.
Period. Tech like the metaverse and the blockchain that's gonna operate on, and you have healthcare. It's the big boy industry. It's always going to be the big boy industry as long as they keep leveraging it and it keeps making more and more money. So yeah, that's crazy, man. There's literally zero righteousness when it comes to financial policy and the actual like economic status of our country, at least the United States. I mean, to be frank, like I said, it's just a bunch of turds in a turd bowl.
Yeah.
None of them are good.
Yeah.
None of them are actually good. It's just like which one is less shitty and preparing for, because I still think there's like good among people in general, of course. It's just there's going to be some pain coming here. So we want you guys to be prepared from a health standpoint, not just buying the bottom and being prepared in that way. Because that's only going to get you so far if shit were to hit the fan or even just you're experiencing hyper-transitory events. You want to be prepared with savings. You want to be saving money. You want to be in a spot that's conducive for success, regardless of what situation comes your way.
Agreed, brother.
Fucking yelling.
Yeah, what else did I have up here? I had Biden, my plans have produced the strongest, fastest, most widespread recovery is with record jobs, record small businesses. I'm pretty sure small businesses just contracted by a crazy amount in the last like month or two, by the way, and wages rising. It's just like me when I lie. Yeah, exactly. It's
tough, dude, because people don't understand this stuff. This is how the tops and bottoms are created over and over again. Because no one's actually having the honest conversation. We just can't have the honest conversation. They don't trust people to know the truth. Just like with health and wellness, understanding something is dumb and simple is counting calories and understanding the mechanics of weight loss and weight gain. Nobody actually knows that still. It's been 40 years and nothing's really changed and people still don't know.
Yeah.
Think about it. They're paying hundreds of thousands of dollars to hospitals because they still don't know.
Yeah.
They still don't know. That's why people just went out and bought the top of this housing market.
Yeah.
We already know housing and real estate is the last thing to collapse, right? When 08 happened, the financial crisis of 08, it took the housing market 2 to 3 years to bottom out. 2010, 2011. What do you think bottom first? Riskier assets like the stock market and crypto.
Sir.
We're here, guys. We're here. There may be a little bit more to the bottom of this. So if Hex goes from 85% to 95%, like whatever, like we're at the bottom, boys. We're at the bottom.
Yeah, what are we at right now?
I've got here. Don't buy real estate. Not financial advice, but holy mother of God, be patient.
Yeah.
You know where the deals are. You know what the asset is that's going to perform. Here we go. Hex Daily Stats.
Yeah, be patient. Try not to listen to your emotional response too closely. And yeah, I think we're going to spend some time in some pain. Like I think Hex has already spent a decent amount of time in pain, but due to lots like the whole environment, I think every risk on asset is going to, maybe there'll be a few gems here and there, but the high majority of risk on assets are going to spend some time in some pain.
Oh yeah, man.
So yeah,
crypto will hit its bottom first. That's the good news. Right? We hit bottom first every time, man.
Yeah.
So yeah, that's the good news, guys.
If you got a plan and you're accumulating here, I think, and you have a runway to accumulate for, I don't know, what are we in June, for like the next 6 months, I think that's a great strategy.
Yep.
By the time the Fed decides to reverse course for who knows what reason.
You know the reasons. You know the reasons. We have trillions of debt now that are leveraged. And the second, like, think about it. They were able to raise, like, what is a 0.25% basis point, or what is a 0.25% rate hike now was like 2% back in the day. That's how much more leverage it is. Think about that.
Yeah.
The damage 2% would have caused in the 80s is now 0.25% now. Think of it like that.
Yeah. Yeah.
That's exactly what it is when you have all this debt layered on it. And like same thing with the healthcare system. Like we almost saw the collapse of the healthcare system. I guarantee you're going to see some sort of like crazy Netflix documentary that's like about that. And people are like, oh shit, wow, we were that close to like an actual real collapse of the healthcare system. Like, yeah, we were. And it was crazy because I had like 20 different nurses I was working with at the time, all in different states in the US. And they were all giving me boots on the ground intel about the shit show that was going on in there that nobody else would talk to you about.
Yeah.
You know what I mean? Like no one's going to tell you like, hey, 90% of the people coming in here are obese and there are real issues with the strain on this and we don't have the employees. And plus, not to mention the mandates that were going on in various states were not helping the cause. You know, when it comes to employment, I'll word it like that. So that obviously, you know, made the issue much worse. But
yeah. Well,
fun stream.
Yeah, really fun, man.
Guys, make no mistake. There's a lot of opportunity out there right now. This is the time where if you're prepared, you've been waiting for this.
Yeah.
You're excited for this. You're healthy. Yeah. You're not scared of what's to come. You have cash. You have dry powder ready to go. You're creating value still outside of what you're buying in crypto.
Yeah.
And you're ready to crush. We're going to crush this downturn.
Yeah.
We're not going to let downturns scare you and spook you out of your bags on an asset where the code hasn't changed. See this website? It's still running. The code's still running. Nothing's changed in Hex. The mindset of individuals when they saw their portfolios go down, that's what changed. So you see sentiment has changed. That changes all the time. Sentiment will change again when the markets go up. And I just gave you the key trigger to look for. Look for the Fed to pivot. Look for the Fed to start dropping rates or pausing their rate hikes.
Yeah.
Look for them to stop tightening their balance sheet. Look for the verbiage to change. Pay attention to their meeting minutes, or their minutes on their meetings.
Yeah.
Sentiment will change. People will get totally fudded out of their bags. Happens with everything. Do you still see people from Bitcoin days, from 08 back to now, outside of like Richard? No. They all sold. They all got fudded out or took profits, and they're gone. Who is really still going to be here besides people who actually staked?
Yep.
Because you see people every day right now losing their status in the stake rep, selling their bags out of fear, and or they're just bloody rich already. I guess I can't blame those people, but why be in the US dollar? It's about to lose a shit ton of value. You just saw the dollar is at the highest it's ever been. This is the most opportunity there's ever been to extract as much strength out of the dollar as possible and to buy something like Hex. Period. Versus, let's buy at all-time highs when the dollar is its weakest. No. Don't do that. Buy when the dollar is strong. Get a lot more for your buck. That's the whole point.
Yep. Buy high, sell low. Should we wrap it up there? Maybe I'll give you a little bit of what I'm looking for in terms of hope. And one thing I want to see turn around to see like a true, I guess, like bottom in Hex is this length of stake. Where the hell did it go? The average stake length. For the first time in a long time, it's actually started to top. For forever, the stake length has been increasing. Right. So the other stuff in the background, this is taking Hex off the market for an average of 6.6 years.
Yeah.
The other stuff in the background, like the liquidity available, so what's available to go buy and sell on different dexes, that's a lot of noise. This is going to be the huge tide that is really like offsetting a lot of the quote unquote sell pressure. And as that just continues to go up and up and up, well, sell pressure is just getting pushed further and further and further back by hands with higher conviction. Right. So this is the first time that I think it's ever really started to go down. We topped at like 6.66 down here, like middle of May. And
we saw a big jump. We went from like 4 point something to 6 pretty quickly.
Mm-hmm.
I can't remember when it ticked over. It ticked over pretty aggressively.
It's a little bit stagnant in here. Right. So I'm watching for that to start to go back up dramatically. Of course, there's tons of good data you can look at, but that's one of the first ones one of the ones I've been watching forever that's actually had a bit of a change in direction. And the other thing is just gas. Like I usually have a gas ticker up here, just like 24/7. Help, like if it's really really low, it's nice to go like send some shit or start a state or whatever. When gas is like low for a long period of time, that's a bear market. That is bad. It is kind of unintuitive to think, but when gas is high, like dude, prices are pumping. Like during our bull market, like that was kind of one of the things that led to like the creation of Pulse Chain. It was like, yo, we've kind of been priced out of making lower hex stakes. It's like, hey, if I want to stake $20 to make, I don't know, like 30% over a year, it doesn't really make sense because of the ETH gas fees. In a bear market, it does make a little bit of sense. You probably can extract some value off of like a $30 to $50 stake. But in the bull market, it's like, yo, gas is sustained at like, I don't know, 150, 200, 300, 400 Gwei, which fucking sucks, but that's the reality. And when the bull market comes back, you're going to see sustained gas prices again. Like 30 cent, like if 42, like that's low. That's low as hell. Back in before like this most recent bull market, that was fucking high. So the bull market,
I think there's a lot of big stakes coming in too for the Pulse Chain.
Sustained high gas. Oh yeah.
Like I think a lot of big stakes are putting their stake amounts for super short periods of time. Like there's always been the bow wave, right? But I think there's a lot of big money stakes coming in trying to time the Pulse Chain launch, and that's like temporarily holding it down. I think it's going to shoot back up again on the stake length that you were mentioning.
Yeah.
Because like I mean at this point we don't know when it's going to come, but I think they're like doing these like the onesie twosies. I think. I haven't seen the data support it, but it just seems like there's been a big increase in the amount of like big money coming in for like 7 days, 10 days, 30 days, which is going to totally tank the average stake length.
Yeah. Yeah.
But yeah, I think when I first got involved, it was like really low. It was like 3 or 4, something like that.
Yeah. Yeah. I don't think, oh, that's not it. No. I think this is the first time it's decreased that I can remember. But yeah, like you said, that's probably something to do with it. Maybe that's it. Maybe let's go check on the hockey. I talked about hockey a couple of weeks ago. My team is actually here in the conference finals against Colorado Avalanche, the Edmonton Oilers.
Oh snap!
Yes, sir. Colorado is a really, really good team. So we're down 3-0. Looks like we might come away with one here, but we got a long road if we're going to get out of the conference finals and into the Stanley Cup finals.
Are you up right now 4-2?
We are currently up 4-2 in this game. So it'd be nice to see that one, but that's just the start of, we got to win 4 games in a row against one of the best teams.
Dude. Schwab made a good point in the comment in the chat. He said hurricane season is coming soon too. So when you have natural disasters about to hit in the U.S. as well, that typically do cause a lot of use for generators and gas and all that stuff. Yeah. I mean, think about that. Plus winter is coming soon for, and I don't mean like crypto winter, but winter for Europe.
Winter in general. Yeah.
Like Europe is totally effed. I don't know what they're thinking, but they are totally effed. Like I'm just speaking out loud here. I have no idea what leadership in Europe is thinking right now when it comes to what they are going to make their citizens go through and are currently going through. Like I just had a client that got back from Germany. I think I told you gas is like $59 a gallon.
Yeah.
And it's not so much about gas. It's so much more so about heating costs.
Yeah.
Utility costs. Right. And there's a little stat that I want every Hexagon to pay attention to. When your utility and your rent and your food all gets close to the 40% mark, that's when riots start. I know it's kind of messed up that we are aware of this stat, but that's where that starts. And I think this summer for America is when I've been telling like my close friends and stuff like, hey, like mid to late summer is where shit's going to get wild here in America. It's going to get pretty crazy here. It's going to be hot. It's going to be warm. I wouldn't be surprised to see some stuff go down. And then Europe, like I said, pay close attention. And when something big happens in Europe and they collapse, we're only a few weeks away. That's like your last, like if you didn't prepare and buy some food and some other stuff, that's your last ditch thing to go and get stuff until this works itself out. That's it. We got a week or two before shit really hits the fan. And then when like it's plastered everywhere, right? And you saw everybody when the lockdowns hit and everybody's like rushing the mad dashing the stores and buying toilet paper. Bro, don't be that person.
Yeah.
Don't be that person. Stock up now. Be smart. It's chill right now. Go do your thing. Save money on inflation. Take care of your health. Because getting to a hospital is going to be even more difficult if that shit goes down. So, I just don't know what Europe's doing. Totally making costs of utilities and heating and gas, all this stuff go through the roof leading into wintertime. It's just crazy. Crazy. I don't know. I worry about it, man. I don't want any of this to go down, but it's just like the price call. It's like it's there. You see what's happening. 140 a barrel.
Yeah.
Apparently, we should all go work at Goldman Sachs. Everybody. My buddy actually works at Goldman here in Dallas. Yeah. One of my best friends from back home in New York. He works at Goldman. I'm gonna tell him that. I'm like, hey Pete, I called gas price. Same thing that Goldman said. Those assholes over there. I'm just kidding. But that's all I got, man. Hopefully people got some value out of this and gives you guys something to look for, to get prepared and not be afraid of what's to come. Because there's a lot of things changing soon. But when you're prepared, you're not scared, and you're just ready to go. And that's what we want to be, ready to go, buying the dip when it makes sense to buy the dip, et cetera, et cetera. So.
Yes, sir. Let's wrap it up there. Maybe we'll just remind you guys next week we're going to have Nicole. We're going to have Nicole on. Where the heck is...
Yeah, we were supposed to have her on this week, but we had to change it up. So we're excited to have her on next week. As you can imagine, she is very, very busy.
She is. Nicole is a doctor that we've had on for the first inaugural episode. If you're not subscribed to Discourse Syndicate, this is where we go live. Mindset of Fitness every single Monday, or most Mondays. I guess we didn't come on for Memorial Day at 6:00 Pacific, 8:00 Central, 9:00 Eastern. So please come tune in for that. She is a wealth of knowledge, a great resource for us. She's going to a cool conference this week, so I think we'll pick her brain about that and probably some other fun stuff.
Yeah.
Other than that,
that
I think that's going to be it for us. That was awesome. Yeah. That was wicked. I learned a lot. Yeah, I love just kind of like talking through that stuff and teasing out some of the like intricacies and relationships and mechanisms going on.
It's fascinating, isn't it?
Yeah.
I think it's some of the most interesting stuff on the planet, but it is also like this big like what the F moment because you're like, dude, who wins here? Like not a lot of people.
Yeah.
Which that's the sucky part, but it is interesting nonetheless.
Yeah. All right, y'all. Thanks for tuning in. Thanks for those active in the chat. I don't know if we got a lot of questions. We were a little bit absent in the chat. Next time we'll make sure to do better, especially with our special guest, Nicole.
Oh, yeah. There'll be a lot of questions for her.
Monday, 6:00 Pacific.
Be there.
8:00 Central. Be there. We'll see you then. Peace.